macro market trends, stock selection, ETFs, options, just some of the topics covered in Tactical Trading. Now we're going to take a look at a very strong industry, Oilfield Services. And the company's providing the so-called guns and bullets for the oil wars. We're going to do that with Kevin Cook, our tactical trader here at Zacks.com. So both you and Dirk Van Dyke, our chief stock strategist, have written about this industry recently. Mm-hmm. You talk about the guns and bullets, right? He calls companies high tech. What do you guys mean?
Yeah, so I started calling, let's look at some of the firms we're talking about. The big guys here, Schlumberger, Halliburton, and Baker Hughes. Mm-hmm. These are the companies that provide services to the E&P companies, exploration and production, and the refiners. Okay. You know, they're not interested in getting the oil out of the ground. They're helping those companies get the oil out of the ground or refine it, and they're providing equipment, everything from pumps to drills, workover services, all kinds of services from the starting of a well to the completion of a well and plugging of an old well. Mm-hmm. So Dirk calls it high tech because it's becoming very sophisticated. You have to not only locate where oil is in the ground, right, but find the most efficient methods to extract it. And in this era where you've got to get every last drop out of a well, right? And I call it guns and bullets, just the pumps and drills, whatever the equipment takes that an E&P company or a refiner would need, either get oil out of the ground or turn it into gasoline. Yeah. These service companies, are just doing some great business. And these are all ranked really high right now on the Zacks rank, either number 1 or number 2, for their strong earnings momentum.
Okay. So then what's driving profits for these firms other than the fact that oil is still above $80?
Yeah, so let's look at some of the factors, that are really driving this here. You're looking at a secular growth trend because it's a global mega trend, primarily driven by emerging markets. China and India, their appetite, developing their cities. And Dirk writes about every new car that's purchased in China, for example, really adds to fuel consumption because it's probably a new car purchase for a first-time purchase for a family, mm-hmm, right? Whereas here a lot of car purchases are just replacements. Yep. More and more new car purchases in emerging markets are just adding to fuel demand. So then we talk about peak oil ideas, the idea that we may have seen the peak in oil reserves. We don't really know what's under the ground, so there's some question about when we hit peak oil. Maybe that's 10 or 15 years away, but we're close, right? They're not making any new oil. Yeah, right. There's no new dinosaurs or fossilization going on. So it's that idea. Then you've got exploration and production firms in the U.S. scrambling to develop new fields, right? Mm-hmm. If oil is priced sufficiently high that they can start new exploration and production on difficult fields, they're going to do it and add to America's energy independence. So, for instance, you've got all these shale properties in the U.S. You've heard of the Bakken Shale up in the Dakotas, the Eagle Ford Shale down in Texas. These companies are aggressively finding ways to get oil from some of these difficult places. That drives profits for the Oilfield Services guys. And then last, I just want to comment, Zacks looks at 265 industries. Right now, Oilfield Services is number 23 in terms of an industry rank because of its earnings momentum. And this is no small feat because you're talking about there's over 30 companies in this industry. So that means many of them have to have a high Zacks rank, and they do. We looked at some of the big boys there. We'll look at some smaller companies.
Okay. So when people are considering investing in these companies, they just simply pick one?
Yeah, I mean, you could look at Schlumberger, Halliburton, or Baker Hughes, and definitely any one of those would be a good, solid add. If you want exposure to Oilfield Services, you definitely pick one of those big blue chips. But it's also good to take a look at some of the smaller companies. Here are 3. The top 2, Key Energy Services and Helix, are both Zacks number 1 ranks this week for their strong earnings momentum. And you're talking about $2 billion companies, right on the cusp of small cap to mid cap, mm-hmm, that have the potential to grow much faster. Oceaneering International is another one. So I would say if you want exposure to Oilfield Services, you pick one of the big guys, and you also look at one of these small caps to get more bang for your buck in terms of earnings momentum.
Okay, got to ask you, do you own any of these?
I do not.
Okay. He is our tactical trader. He's Kevin Cook, always interesting, never boring. You can follow him on Zax.com because he writes about a lot of different industries, a lot of different issues and trends that he analyzes in his regular column, Tactical Trader there. Or you can follow him on Twitter at Kevin B. Cook. With Kevin, I'm Terry Ruffalo.